Hi, everybody. This is Robert Chadwick with America Mortgages. Thank you for joining our most recent webinar. I think you'll find this one to be a little bit different than what we've done before. I think we're going to focus a lot this time on just the general real estate market. As everybody is aware, with the global issues, certainly we've seen some increase in rates when we were hoping to expect a significant decrease in rates by now. However, I think this actually could be a unique opportunity, and we wanted to cover this. And I really appreciate everybody tuning in and spending your time with us. So this will probably last about 30 minutes. The webinar will consist of some slides, and then at the end, if you could hold your questions, there'll be a Q&A. In the webinar chat, as you'll see, there will be a link if at some point you would like to schedule a time to speak with one of our loan officers. We have loan officers all over the world, speak a variety of languages, so it'll be in your time zone, at your convenience, and possibly in your language. So with that said, let me share the slides. Okay, so this will be the U.S. real estate and mortgage outlook for 2026. What we feel that foreign nationals and U.S. expat, U.S. investors need to know that often you will not hear or that banks do not offer. So the introduction, why this webinar and why now? So as everybody on this webinar is probably aware, but every year, non-U.S. residents, so this would be both, foreign nationals or U.S. expats, purchase in residential property alone anywhere from spend as low as 30 billion all the way as high as 100 billion. But last year, they purchased $56 billion, which was a 33% increase. Yet still a lot of foreign nationals and U.S. expats will pay cash. And a lot of that has to do with the inability to access proper financing, which we feel at America Mortgages we have accomplished. Mortgage rates, if you look at the last, say, 12 months, even with the global issues, they are starting to ease in 2026. We are starting to see or foreshadowing from some of our investors, where we get our funding, that they do feel that we will see significant decrease in rates as the year goes on, the war stops, and then potentially, the economy increases or improves. But I think one of the things that we want to cover is something that's actually been quite unique. In the past, people have just looked at, the major cities in the U.S. and this is, where I'm going to invest because this is what everybody tells me. I think we're actually seeing a shift in this, and we'll go over that in more detail. And then, of course, as we are America Mortgages, we'll go over the financing options and what traditional banks just aren't able to do and what we've been able to fill this gap in order to become the industry leader when it comes to foreign national lending. So, why traditional banks say no? And this is probably very common. If you have any U.S. expats on here, you'll probably understand this frustration. But in general, foreign income, foreign tax returns, foreign bank statements, they just don't fit the domestic underwriting. And the reason why is, and it's in every country, most banks were created to service their own clientele, their own citizens. The fact that foreigners are investing into this market is absolutely fantastic, but they're still not able to, for a variety of regulatory reasons, to kind of tweak those boxes. So if you don't have U.S. credit, in many cases, for many global U.S. banks, you're automatically going to be declined. But I think what makes us unique, and I think one of the things that you rely on expertise for anything, right? If you're going to if you're going to fix your plumbing, you're not going to call an electrician. And this is where we come in. We see this probably 20% of the time with our business is a client will call us and maybe they have different expectations or maybe on interest rates or whatever it may be. And then I truly feel this. We tell people exactly the way it is, what the rate's going to be, what the terms are, because again, this is all we do. And then, like anybody, I mean, you should actually check around and see, what other options there are out there. We absolutely do advise that. But if you're not an expert in this industry, which most companies are not, then you're probably going to get false information. You're going to get a false interest rate, and half of the business that we see are these people that have gone down this road only to find out that it wasn't as stated. So again, most foreign nationals or U.S. expats that go out to a broker or a small bank or even a large bank, they rarely see you as clients, and so they don't understand the situation. And as a result, 47% of the buyers tend to pay full cash, and it's not because they want to, but it's because no one showed them another path. The three paths to mortgage financing. So, of course, this one is our most popular, and I think if you're not familiar with this, you will be quite amazed. The easiest, most stress-free mortgage that you'll ever do in your life, and certainly in your own home country. It's called a DSCR financing, and DSCR stands for Debt Service Coverage Ratio. And basically what that means is if the rent covers the mortgage and taxes and insurance and so forth, then the loan will qualify. So no tax returns, no personal income. And with us, because this is our focus on non-residents, no U.S. credit. It's highly important. If for some reason you're not buying an investment property, you're buying a holiday home or a second home, or maybe the DSCR ratio doesn't work, then we can qualify you on your foreign income. But unlike most lenders or brokers, we're not going to ask you for your tax returns for your home country. We're doing loans all over the world. If we had to do that, it would be probably a disaster. So what we do is we have a template, and you have either your employer, if you're employed, or your accountant, if you're self-employed, follow this template. And it simply states 2 years of income, current year to date, and that's it. So it's a very straightforward, very fast way to document your income. If you're high net worth, this is a fantastic program. We do a lot of work with private banks, so private banks actually really like this product. We qualify you off of your liquid assets. So basically, if you have a stock portfolio or cash in the bank, whatever it may be, we're going to use a formula, and we'll go over that in one of the other slides. But that formula will allow us to figure out what your monthly expenses could be on a mortgage without any encumbrance on that portfolio. So fantastic way to qualify. Again, everything that we do, we try to make this as simple as possible. And one thing that actually, again, kind of makes us unique, because all of our clients are living somewhere around the world, we have a full concierge service, and there's no extra cost for this, but it allows you to do everything from getting the mortgage to finding a realtor to getting insurance on the property to transferring funds at proper rates, all of these things that you would need as a non-resident investor. So with us, what do you actually need? Well, you need a valid passport, of course. You need proof of your current address. So, we need to see that you're living and working somewhere, outside of the U.S. Down payment funds, they need to be seasoned for 60 days. And what does that mean? It means that however the funds that you're going to use for the down payment on the property, they need to be coming from somewhere, sitting somewhere for at least 60 days. And this is an AML policy, not really an American Mortgages policy. It's a money laundering policy. We need to see it in some foreign bank, in some U.S. bank. We need to see maybe you sold a stock and this is the money. or this is from your retirement account, or you sold a property and this is the money, or refinance, whatever it may be, we just need to be able to trace it back 6 months. I'm sorry, 60 days. What you don't need is a social security number. You do not need US credit. You do not need residency, or you do not need a visa if you're from a visa waiver country. And of course, no tax returns unless you're a US expat and you're buying a second home or a primary residence moving back to the US. But I think more important, and this is something that we see across global markets, because our parent company, Global Mortgage Group, actually does mortgages around the world. There's no AUM. So all of our lending is dry lending, meaning that there is no requirement for you to, sit funds in a bank account that you're not able to use for the terminal loan. So the markets that people used to look at, and I mean, I fell victim of this myself. It's, what I say here, it's the old playbook. So you buy in the biggest coastal cities that you recognize. Everybody knows LA, everybody knows San Francisco, everybody knows New York. But these days, where people are moving, especially out of certain markets, like, say California or New York, they're moving to less tax states or more business friendly states. These are probably the property or the locations that you want to see for not only appreciation, because the market is people are moving into the markets, but you're also seeing increased rental yield. There's still a massive shortage of properties in the U.S. And so by looking at these markets that probably even U.S. citizens that are not living in that state aren't even looking at, is a really good opportunity for our investors. We've done a lot of research on this. We have a lot of data that we're happy to share. But it will give you not only the target markets, but it'll show you what the potential rental yields are in these markets. So I think depends on what you're looking for. If you're looking for a cash flow strategy, we suggest the Midwest, the Sun Belt states, such as like Arizona, where rent often will cover or often exceed what the mortgage payments are. And we're seeing in these particular states gross yields of 7 to 13%. And if you have really good accounting, which, part of our concierge services, we have a couple accountants that we can refer out to, then you're going to really be able to maximize on your returns. If you want to go for, growth strategy, again, we recommend the Sun Belt, and then some select like secondary metro cities. We're seeing a lot of movement in Atlanta. If you look at Atlanta, there's a lot of EV battery companies going in. A lot of industry is moving in there just because of the business friendly society. So I think if that's what you're looking for, which everybody is looking for when they invest, I think it may be time to kind of relook the locations. So if you're going for the cash flow markets, so we've put a lot of research into this. Again, we're happy to share what we've done. We have a complete book on this. Cleveland, Ohio. Frankly, I'm an American. I've never been to Cleveland. But would I buy a property there? Absolutely, with these numbers. So we're talking about average gross rental yield at almost 10%. So it's one of the highest yielding markets of any major U.S. metro city. But uniquely, it also has one of the lowest barrier of entries on buying real estate, which I think prices of average is 110,000. Now, to qualify that, we do have a minimum loan amount of $100,000. So a purchase price needs to be 140,000-ish to be able to work out. But if you want to buy multiple properties into a portfolio, we can certainly do that, and we can go all the way down to 100,000 on the purchase price. So you can buy multiple properties. Indianapolis, again, the city I've never been to. But again, fantastic rental yields, really friendly buyer's market, a diverse economy, super low in inventory, so you have a steady demand of properties. And again, we're seeing this with Cincinnati and also Birmingham, which if you're looking at the screen, you can see has potentially almost a 15% return when it's talking about the rental yield. So growth markets. So these are the markets that we've been monitoring, we've been seeing, and we published a report that it has the highest concentration of people moving mainly from the coastal states into these states. And I think if you've been following anything with US news, you can probably see why. But you'll have, Dallas, Fort Worth, you've got Tampa, Florida, Charlotte, North Carolina, Nashville, Tennessee, San Antonio, Texas, Atlanta, Georgia. Now, certainly Texas and Florida has always been a very popular investor location for us, particularly. But places like Tennessee and North Carolina are often overlooked. So if we look at what the rate forecast is in comparison to, I guess, interest rates, you can see that it's gradually easing, and I think this will happen as inflation cools. Will we see interest rates go down to say 3 or 4%? I mean, certainly, I think Trump would like to see that. I don't know if that's going to be the case unless, we see some serious improvements. But keep in mind, one of the big factors that we're really promoting about buying now, as opposed to all of these people that are sitting on the sidelines waiting for interest rates to drop to, say even 5%. These people may be sitting on sub 3% loans that they did right after COVID. These people are going to flood back into the market. And I think as, everybody realizes right now it's still a buyer's market, but as soon as that demand increases, you're going to be paying, 10, 20% more for the property tomorrow than what you can pay for today. And this is where we get to one of my famous sayings is marry the property, date the rate. You're not always going to find, especially when the market heats up, you're not going to be able to find that property that you love. Everybody was rushing into the market and they were just buying something that was getting accepted. But right now, you have an amazing opportunity to actually buy that property that you like. If you're buying, say you're buying around a college campus, always going to be demand. You're buying around a military base, always going to be demand. Like these types of markets are often overlooked, except for by the real sophisticated investors. And if you look at what everybody's probably seen what some of these BlackRock and so forth are doing with the purchasing of large portions of residential real estate. If you look at their thesis of how they're doing it, a lot of times it is around military bases, it is in university towns where they know they're going to be able to command a higher rent and the demand for properties is going to be significantly higher. So, of course, fixed rates, and we'll go through this on another slide, but it makes the U.S. super unique. 30-year fixed rates. We even have 40-year terms with 10-year interest only. This is something unique to the U.S. market, and it really makes investing just much more, I guess, palatable because you can buy better, more expensive properties because you're able to go for a longer duration of the tenor. We've saw this during COVID, and I think we're going to come into this market again. Is the refinance, the purchase, refinance, purchase, refinance. It's allowed a lot of our investors, and I think if you go through our YouTube page, we even have a couple that over the last few years we've helped them buy 25 properties around the U.S. And these, I think she was a school teacher and he worked for the government, so they weren't high income earners, but they were able to build a significant portfolio where they were able to leave their jobs, and it was all through this process of purchasing, now potentially below market as the property value increases. Maybe they're adding some value to it. They're refinancing, pulling the cash out, and buying new property and buying a new property. And again, what makes U.S. mortgage lending or U.S. real estate investing quite unique is it doesn't matter how many high loan to value mortgages you have. If we're pulling cash out, we can do a 65% loan to value if you're a foreign national, up to 75% if you're a U.S. expat. And you can take those funds and roll them into a purchase. And on a purchase, we can go up to 75% for a foreign national and up to 80% on a U.S. expat. So it really allows somebody to build a U.S. portfolio actually quite quickly and quite easily. Okay. So what does the U.S. offer as opposed to global investments? Now, one of the biggest markets, and again, because our parent company, GMG, does mortgages all over the world, we also do mortgages in Dubai. We were getting a lot of questions of, hey, I can make a better return if I buy a property in Dubai or what. Well, I think we all saw how that's gone. Now, will it return? Probably. But you have these you know, economic and global insecurity issues pretty much everywhere in the world, except for the U.S. So now some people may argue with me about that, but I think that's the way I look at it. But in general, these items are probably I guess the biggest reasons why people invest into the U.S. real estate market. 30-year fixed mortgages. Now, keep in mind, a 30-year fixed mortgage in the U.S. is not tied to your age. Now, most countries, the mortgage tenure, so how long the amortization period is, will be tied to either a working age or a specific age. In the U.S., because of anti-discrimination laws, you cannot discriminate against age. And for that very reason, somebody that is 19 or somebody that is 99 deserves the same right to be able to purchase and to be able to finance real estate. So a 30-year mortgage, regardless of age. No stamp duties. I'm based in Singapore, and I can tell you if you're buying an investment property and you're not a Singaporean or a couple other nationalities, there's a 65% stamp duty, which, it's meant to obviously control the real estate market and not have it heat up, but it also impacts, the growth of a property, the capital appreciation, the potential rental yields if you're going to invest it. The U.S. has no stamp duties. Now, certain states, California and New York being those two, they do have something called a mansion tax or mortgage recording tax, but it's still minor. I think the highest is in New York, and it's like 1.5%. DSCR qualifications. Again, we talked about this earlier. We'll go over this in a little bit more detail, but being able to qualify for a mortgage without personal income. We deal and probably most of you on this call may be self-employed. Self-employed people in general, they don't show their true debt serviceability. So with that, it may often be difficult to qualify, especially if you're qualifying for multiple properties. Again, this loan qualifies based only on the rental income. And one thing that's not listed on here, we have another page, but is because all of our funding is done onshore, meaning that we're not funding from, if you're in Singapore, for example, we're not funding from a Singapore bank. This does not affect your ability to borrow in your home country. So this debt will not show up on your local credit report, which is actually something that is pretty valuable, especially if you're looking at investing locally and globally. And of course, the rule of law. The rule of law in the U.S. is very, very transparent. It, depending on the state that you're in, It can either be very, lender friendly or very borrower friendly. But the states that we recommend, and again, we're happy to share this handbook, tend to be very landlord friendly. So if there's an issue with maybe somebody isn't paying their rent or whatever it may be, we recommend these certain states. USD, again, people may have differing opinions, but having an investment, in U.S. dollars, who knows what happens in the world? We never know day to day. Is actually something that should probably be considered in general. Market depth and liquidity. No other country in the world. Absolutely. And this has to do with the US having a very vibrant secondary market. But there's $2 trillion, and this is only residential real estate, mind you, of annual transaction purchases, not counting people refinancing, pulling cash out, releasing equity, whatever it is. So no other country can offer this type of scale, transparency, and more important, exit liquidity. You need to sell a property. Certainly right now it's maybe not the best market, but you still have active buyers. It really just depends on what you're willing to sell it for. So how to build a U.S. real estate portfolio without living in America? So the first thing, and this is something that I think maybe some people overlook, but I'm glad everybody on this call obviously has had some connection with American mortgages. You need to get pre-qualified. This is, paramount. It's number one. You can do this within 24 to 72 hours. How it works, if you've gone through this process, as you talk to one of our loan officers, again, they work 24/7, depending on the country you're in. And they'll explain the loan programs that are available. You explain your situation, you explain your requirements, and we'll tell you, okay, we can do A, B, C, and D. Very transparent. The only thing that you're going to do is they'll send you a secure link. You'll complete the application. It literally takes 5 minutes, and it populates our application. You're going to upload your passport. If it's a purchase, you're going to be able to show that you have the down payment, plus any kind of reserve requirements or closing costs. If it's a refinance, you're going to submit I think the property insurance or the property information, and then we'll issue a pre-approval letter normally it's within 24 hours. And once you have that letter, then you can go shopping. It's game on. It's the realtor will want the letter specific for the property that you're finding. But in general, when you're looking for a property, when you're identifying this property, it always seems to be you find the best and the perfect property when you're not pre-approved. So once you have this letter is actually, we say it's good for 6 months or 3 months, but it really, as long as your financial situation doesn't change or the loan program doesn't change, then that letter is good. And again, when you find that property, it can be very specific. So if you have a realtor, fantastic. We suggest you stay with that if you're comfortable with it. If you don't, and you would like to have a realtor that likely we've worked with in the past, we can do that. So if you say, hey, we're looking in this location, in this city, at this price range, we'll try to match you with a realtor that we've worked with that also understands the uniqueness of non-resident buying. And I think when you go through the process, you'll see why that's important. Now, if you're buying under a DSCR, again, you're using the rent to qualify, that's why it's important to actually use a realtor that understands this as well, because the only properties that they're going to show you are the properties that should or will qualify for the DSCR program. Now, closing your property or closing the mortgage, we get this question on a daily basis. What makes, again, us unique, because this is all we do, and you'll hear me say this over and over, but it's highly important, is we have a variety of ways to close. So if you're in a Hague Convention country, then you can sign at your local notary office or your local attorney office, and they'll apostille it, and that will be sufficient. If you prefer to go to a U.S. embassy or a consulate, we can set that up. If you're flying to the U.S., you don't actually have to go to that particular state. We can send a notary even to the airport to meet you to sign your closing documents. Some states allow us to even sign over a digital signature. So it's basically, a Zoom call, and you're completing everything over a Zoom. So no matter what it is, we have the ability to close it on time and at your convenience. And then again, if you're buying it for an investment, you want to make sure that you use a professional property manager, someone that understands your need, how they're going to be wiring it, and is familiar, of course, with foreign national holders of properties. So scaling your portfolio, we talked a little about this, but I'll go over it quickly again. But it's just common sense. And again, what makes the U.S. unique is we can do as many of these mortgages as you would like or you feel comfortable with. So you buy, you either improve the property or you wait for the appreciation. You refinance, you pull the cash out, you take those proceeds, which would be seasoned, by the way, because you had owned that property, and you use it to purchase another or maybe multiple properties. And we can do this all in conjunction. So you're closing on one, those funds are being transferred into escrow, and those funds are being used to purchase the other. One of the things that actually we don't cover on our slides is, and I think it's quite important, especially these days, no money is ever sent to us. We don't receive any funds directly from you as the client. Everything is done either through an escrow agency or through an attorney, depending on which state it is. So the general mortgage overview. So we'll do purchase, we'll do refinance, we'll do cash out or equity releases. Again, if you're a foreign national, you can get up to 75% loan to value. U.S. expat up to 80%, 30-year mortgages regardless of age. One thing, I didn't cover this earlier, but this is a very unique program. And it was created actually when interest rates started to climb. And again, what makes the U.S. quite unique is because of the liquidity in the secondary market, they can be very creative in how they originate or structure loan programs. And this one actually is perfect for this. So as interest rates are, a bit higher than maybe what some people would like to see, we can do a 10-year fixed interest only. So it's a fixed rate. You're servicing the interest for a 10-year period. And after that 10-year period, we don't know where rates are, right? So, it could be higher, it could be lower. But the beauty of this program is you know exactly what your payments are going to be over the entire time of the loan, because as that 10-year interest only expires, the rate does not change. The only thing that changes is now you're paying principal and interest. So you assume with rental prices increasing, this makes an absolutely beautiful loan for an investor. So we have loan programs in all 50 states. You qualify on the rental income, not your salary. If you do want to qualify in your salary, we allow foreign income. So again, borrowers, non-U.S. citizens, U.S. expats, no U.S. credit or residency required, no AUM. The loan process in general for the loan approval takes 72 hours. And so once you find a property, we submit all of your paperwork to our underwriting. We are a direct lender and we're a broker, so we'll find the best program for you that's out there. But it takes about 72 hours to be able to issue that approval, which normally is, earlier than what a normal contingency in a purchase contract is. So it still gives you time to kind of say, okay, this is a really great program. This is perfect. This is where I want to go. 30 to 45 day closings, very common in the U.S. And again, you can open your application and sign your closing documents from the country that you're living or your home country without ever having traveled to the U.S., but you still are able to travel to the U.S. if you want. One thing that we are super proud of, and we're certainly leading the industry on this, and this really has to do with the DSCR loans, but 97% of our loan applications are approved. So if you're wondering, can I qualify? Will I be able to get a loan? As long as you have the down payment and whatever, the reserve requirements are, you absolutely can get the loan. Again, we have 30 loan officers in 12 different countries speaking your language 24 hours a day, 7 days a week. We have this number at the bottom of the page. You might want to take a picture of it, or you will receive this slide presentation after. But you can call this number and you can speak to anybody at any time. So the loan programs, this will go over quite quickly, and then we'll get to the Q&A. The AM rental coverage. Again, this is a beautiful loan. It allows you to qualify on the rental income and not your personal income. So loan amounts as low as $100,000, 30-year fixed rates. Some people now are asking for, say, I want a 5-year fixed. The difference right now between an ARM, like an adjustable rate mortgage, where it's fixed for a short period of time, but amortized over the entire 30 years, there's not really much of a difference in rate. So there's not much of a difference in the savings. Certainly we offer it, but most people will choose to do a 30-year. If you look at the how it's explained below, if you have the gross expected rental income, as long as it can cover the mortgage payment, taxes, and insurance, and if there's an HOA, then the loan will qualify. Now, probably the biggest question that we get on this is, does the property have to be rented when I buy it? And the answer is no. So what we do and how we come up with this 2,400 number is when we order your appraisal, which will be the only thing that you'll pay out of pocket when you're buying the loan, we also order a supplement for it. And as the appraisal tells us what the comparison sales are to make sure that us as the lender and you as the buyer are getting a fair and equitable deal, it also does the same thing for the rent. So when we get the appraisal, it'll tell us this is the rent that you should be able to get for that property, and that's what we will use to qualify. Now, if you're buying a property that is already tenanted and they have a rental agreement that may be exceeding what the appraisal says, it may be possible to use that rent. And it's kind of an underwriting loophole, but it's either way, it's a fantastic program. Okay, if you're a U.S. expat and you've gone to Bank of America or your local bank that you've banked with for like 20 years and you've tried to get a loan, you'll find that as soon as they find out that have your income in euros or in pounds or wherever it may be, you're going to be immediately excluded. With us, we know that you're going to be earning foreign income. We know that your bank statements are going to be in income. We know you're probably not going to have a W-2. As long as you're filing your U.S. tax returns, that is perfectly fine. You still have to maintain U.S. credit with at least a 600 or 640 credit score. But what you're going to do is to qualify with the same exact loan programs, the same exact rates as if you were living and working in the U.S. Now, for this program, and you can see the example below, you still need to use the debt to income ratio, which is 43%. So if you're making, this is based off of your gross income, by the way, if you're making $10,000 a month gross, your mortgage payment and taxes and insurance and HOA have to be below $4,300, and it's easy to qualify. The AM Investor Plus. So say you found a property that does not DSCR, or you're a foreign national and you want to buy a property as a holiday home or a vacation home. We can absolutely do this. We don't use your tax returns from your home country. We're going to use the letter that we discussed earlier. So if you're employed, it's from your employer. If you're self-employed, it's from your accountant. You can get up to 75% loan to value on this on a purchase and up to 65% on an equity release. 70% if you're just refinancing for a lower rate. Again, this works just like it would for a US citizen that was filing taxes. It's going to be based on the debt to income ratio. The debt to income ratio, and this also is for expats as well. Um, it qualifies, or the debt that we're using is the debt for your residence in the country that you're living in, and not your accumulative debt. So it's a little bit unique way to look at it. So we talked about this again earlier. If you're a high net worth client, we can look at your liquid portfolio. The only caveat to that is that portfolio has to have some attachment to the U.S. So if it's in a bank that is in your home country, there also has to be a bank in the U.S. Because they need to be able to verify it. But this is an example of how it works. If you have $5 million in a liquid portfolio, again, stocks, bonds, whatever it may be, we're going to use the fixed term of the loan. So we'll average it out over 60 months. We come up with an income. As long as it's below that, the mortgage payment is below that, the loan is going to qualify. So now we'll get to the Q&A section. Hopefully people have been entering the questions into the chat. I'll go through them one by one, and if you want to ask more questions through that, then we can absolutely do that as well. This is our contact. If you scan this, it'll bring us, I think it brings you either into the loan programs or our WhatsApp. But either way, we can be reached at the 845-583-0830 number, 24 hours a day, 7 days a week. Within the chat, you will see a link in there if you want to schedule an appointment to speak to a loan officer. So let me pull up the chat, the Q&A. Okay. Second. Okay. First question. What's one thing banks typically don't tell foreign buyers that could make an impact difference to their investment returns? Wow, it's a good question. I don't think that certainly banks will never purposely mislead the borrower, but I think when they don't provide certain loan programs, if they don't tell you, like for example, U.S. expats, probably 10% of our business every month comes from a few U.S. expats that go through the process with their local bank, only to find out that they're 2 weeks into it, that the underwriter finally looks at the file and says, oh, I'm sorry, you're earning your money in euros or in Sing dollars or Hong Kong dollars, whatever it may be, and then the loan gets declined. So that's probably maybe and it's not that they're not telling you. It just doesn't come up until towards the end. And if your loan officer is not familiar with it, then it becomes an absolute disaster. With all the uncertainty around interest rates, would you recommend buying now or waiting to see if rates come down further? That's a fantastic question, and I absolutely recommend buying now. I think you have a lot of so if I go back and I take a look at a lot of the investors that we work with on a regular basis, these are very sophisticated investors. I can tell you, we have one client that, and there's no exaggeration, owns more than 400 units in one city. And it's a secondary city too, so he's kind of controlling the market. But he's been when interest rates go up and there's no buyers, that's when he's going in and he's acquiring these properties because he can get smoking deals. He can go in there and he can negotiate all sorts of things. The closing costs paid for, reduction in price, all of these things that he's not going to be able to get when that market heats up. So that answer would be absolutely yes. Next question. Are there any particular U.S. cities or regions you're especially bullish on for 2026? And what's their factor purpose investment? Yeah, again, we have an entire book that we put together on this, and I think it's quite hefty. I think it's like over 100 pages. But what it does is it breaks down the specific markets, and if you now with AI, it's so easy to type in what's the biggest, metropolis in the US where it has the most incoming, whether it's foreigners, foreign workers, or US citizens that are moving in to fill a certain industry, and it's going to spit out a bunch of cities. So I think, you have to be open to looking at things that, are not sexy. Like if you're buying something in Indianapolis, that's not sexy. But if you have something in New York, certainly, I own a property in New York. But I think if you're looking for pure investment, which I think, all of us are, then you have to be very open-minded in how you're looking at it. Next question. I am in Singapore and have never owned a property in the US before. How difficult is for a foreign national to qualify for a mortgage compared to a US resident? Well, again, great question. And I think up until, we started America Mortgages, it was extremely difficult. I'll just, again, because I'm living in Singapore, so I think I have a unique perspective on it. Singapore banks will offer loans. If you want to buy a property in Australia, in the UK, Thailand, wherever it may be, they were offering loans. US, they're not. Foreign banks in general are not offering loans, meaning that you probably wouldn't be able to go to your local bank. And this is the reason why America Mortgages was created. We wanted to be able to provide US mortgage financing for both foreign nationals and expats exactly the way it should be, but more transparent and actually easier. So to get to your question, it was kind of a long way around. Buying a property in the US, especially if you're using a DSCR method, which is qualifying on the rental income, you will find this to be the most easy, the most straightforward, and the most stress-free transaction of your life. Next question. For someone looking to build a portfolio rather than buy a single property, what financing strategies tend to work the best? Well, I mean, and I can, if you go to our YouTube page, you can go back and you can see a video of a couple that we helped. And I talked about this earlier. This is only one. There's been many of these similar stories. Again, the US is quite unique because you can buy, you can refinance, you can pull the cash out, you can buy again with no limitations on the number of mortgages that you can have. So you could have 175% loan to value mortgages that are all cash flowing, all appreciating. And then, you're, as you go, maybe it's 6 months to a year, whatever it is, you're pulling cash out of these properties and buying additional ones. That is the best way to do it. There's something called a Burr method, which I think is like buy, refinance, repeat, refinance, repeat. And it's for that very reason. Okay, I've heard that some investment property loans don't require traditional income verification. How does this? So I just covered that, on I think the earlier question, but the DSCR loans, which is the debt service covered ratio loans, will qualify only on the rental income of the property. Now, one of the things, and I think we're actually very unique in this market, and actually not just for foreign nationals, but in this market in general, is we actually have loan programs that have no DSCR ratio. So as an example, you find a property that you love, you know that this property is going to appreciate, you're going to be able to do a value add to it, whatever it may be. But the rents right now in that area are not covering. But there's a power plant that's being built and they're going to need, 10,000 engineers. This is a type of property that for almost every lender gets turned down because the rent's not going to qualify. We actually have a loan program that's a no ratio, meaning that even though the rents don't qualify, you're still able to purchase the property. The loan to value is, because there's more risk as a lender. So the loan to value is decreased by 10%. So instead of max, 75, it's at 65, but it still allows you to acquire that. Are there any tax or ownership structures that international buyers should consider before purchasing their first investment property? And, again, all these are fantastic questions. Most people will buy a property in a U.S. LLC. And there's a variety of reasons why they do this. Certainly, tax benefits is one of them, but it also, and again, I think this is unique to the U.S. It shields you from liability. So, as a real estate investor, you buy a property, you rent it out. Say something happens in that property, and God forbid somebody that's killed. Um, you know, the U.S. is a litigious society, of course, and say they try to sue the owner of the property. They're only going to be able to sue up to the LLC level, meaning that they're not going to be able to go after your personal assets and whatever country you're living in or other assets that you may have in the U.S. So a lot of people will choose to hold a property for protection in the LLC, but it's also a beautiful way to use it as a business where you have certain write-offs and so forth. If you have proper tax accounting, and we can refer you to somebody that isn't, then you can actually you can almost. I mean, I don't want to guarantee this, but if you have proper tax accounting, your income that you're going to earn on your U.S. property, you will not have to pay taxes on it. Next, how do DSCR terms differ from short-term rentals versus long-term rentals? Again, another good question. The long-term rentals versus short-term rentals, it becomes a little bit challenging. We can get a report on a short-term rental. Your loan to value may be reduced a bit. Again, there is a bit more risk because of how it's the short-term rentals are structured, but it's just a matter of ordering the correct report. And again, because this is what we do, we know exactly if you say, hey, I'm going to buy this and use this as a short-term rental, then we'll know exactly how to structure it. Who are the investors? Not sure I understand the question. If you're talking about who are the investors in U.S. real estate, it's everybody. As long as you're from a non-sanctioned U.S. country, which there aren't that many, then you're going to be able to get a U.S. mortgage. Do you service local loans? Not quite sure I understand that, but all of mortgages in the U.S., if you're familiar how it works, is although we'll fund the loan, loans get sold into the secondary market. You have a servicing agent that will always be collecting your payments, but who actually owns that mortgage could change throughout the life of the loan. It doesn't impact the terms or anything to do with the loan. Everything stays the same. It's just your servicing agent may change. Is leverage the benefit of a loan over cash? Absolutely. Every time, every time I hear that people are paying cash for a property, I always think why? Because with proper tax planning, you can really mitigate and improve the yields. And you could, I mean, if you're looking at appreciation, which the U.S. is fantastic for in many markets, you're going to be able to make more money in the long run off of using a mortgage than you would, with reasonable interest rates, of course, than you would be just paying cash for one property. Question, what do you mean by no minimum deposit required AUM? Let's say if the property is selling for 150,000 and we have a down payment of 15,000, is that doable in any way? That's two questions. So first question is AUM, it just means if you take HSBC, for example, HSBC, if you want to get an international loan, I mean, they're kind of pulling back on a lot of that, but they used to require you to open up an account with them. And it was, I think, depending on the loan size, you had to park between $50,000 and $100,000 sitting in that bank for the entire time that you have that loan, which is absolutely ridiculous. With us, we only do dry lending, meaning that there is no requirement to open up a bank account with the lender, if we're the lender or we broker it out. And then your question is, if you're looking for $150,000, but you have a $15,000 down payment, is that doable? Unfortunately, The minimum down payment for a foreign national is 25%. So in this particular case, you would need a minimum of $50,000. Plus, you would have to show that you have 6 months reserves and you have to be able to pay for the closing costs. So I think you're going to have to get a little bit more cash, and then certainly we can assist. Next question. Are there ways to lower the down payment if I have U.S. credit score? Unfortunately, if you're a non-U.S. passport holder, and when I mean you don't have a green card or you don't have residency in the U.S., then you're going to be treated as a foreign national regardless if you have U.S. credit. Now, if you have an I-10, there may be some special pricing or some LTV options, and I think you should probably speak to one of the loan officers about it. But in general, kind of across the board, you're looking at a 25% down payment if you're a foreign national, or 80%. I'm sorry, 25% if you're a foreign national, or 20% if you're a U.S. expat or green card holder. Next question. How do loans work in other countries for people located in Singapore, specifically in Thailand? Sorry, a bit more Asia focus. I know. Okay, so our parent company, Global Mortgage Group, does offer loans in Thailand, and I'll cover this quite quickly, but it's a 50% loan to value. I think the tenor is like 10 or 15 years, and I think the interest rate is around 9%, but there are certain caveats to qualify. If you want, you can email me directly, and I'll put you in touch with the person in our office that handles Thailand. Okay, hold on. There's a couple more questions in the other chat. 1 second. Oh, Jason, there's a lot of questions. Okay. What kind of properties do you specialize in? Is it only 1 to 4, a single family? No, actually. So if it's considered a residential mortgage, which makes it very easy to qualify, then a 1 to 4 unit. You get the highest loan to value. You can qualify on DSCR and the best rates. Now we'll do everything. We'll do commercial. We'll do multifamily. So whatever you have in mind, I would suggest speaking to one of the loan officers and actually, going over, or if you have the listing, if you can share the listing with them, they can tell you quite quickly what you can qualify for. Well, thank you for the compliment. A lot of insights. Thank you. Perhaps I missed it. Is there a non-recourse loan option as well? Purely DSCR? There is not. But I mean, to be quite frank, you have the only time that there's a recourse, true recourse on a loan, where they're going after you for you foreclose on the property. They only go after you is if they can't recover the money that they've put out, the principal on the loan, plus with any kind of penalties and interest. At the loan to values that we deal with, really a recourse on, one, if it's a foreign national living abroad, I mean, they're not going to go after you in your home country, and likely they're not going to go after you and if they can't recover their loan. So I know that seems to be a question a lot of people have, recourse or non-recourse, but it's not, it really is not a factor on these types of loans. We talked about that question. Okay, given the emphasis on stability and liquidity in the U.S. market, what are the most overlooked risks foreign investors still underestimate when investing today? Well, I think it's one of the items that I talked about earlier. I think people are unaware that you can hold the property in an entity. And I think it gives you a lot of unique opportunities besides treating it as a business, but some security and some protection to kind of ring fence that property to all of your other assets. So I think that's probably one thing that maybe people don't consider. You certainly can buy in your personal name, but we always recommend buying in an entity. Next question. Oh, we already answered that one. Okay. Do you help with identifying properties that may DSCR? So we're not realtors ourselves, but we have an amazing realtor network. So if you tell us, hey, this is what I'm looking for, this is how much down payment I have, this is sort of what my expectations are, we'll put you in touch with a realtor that actually can find a perfect property for you. Who forms an LLC? Well, an LLC, you can do this online. The LLC, it costs a couple $100s, and we actually have a link on our website of somebody that can assist you with that. The thing that actually takes a while, and so why you should actually prepare the LLC maybe the same time you're getting pre-approved for a loan, is they have to issue a tax identification number. And if you're a U.S. citizen, you get it almost immediately. But if you're a foreign national, it could take up to 30 to 45 days. So it's kind of important if you're going to do an LLC to do it right away, even if you don't use it. I mean, it's only a few $100, so it's easy to kind of just put out there and hold. Okay, another question. Looks like I think hopefully that's the last one. It says, as an American expat, how wise or unwise is it to buy property in a city one is unfamiliar with? Well, I mean, I think 20 years ago, it was probably maybe not the wisest choice, but these days it's so, I mean, you can get on a Skype and you can talk to your property manager. You can go online and you can view the street. There's so many ways that I think that, the real estate investing market, has shrunk to where it really doesn't matter where that property is located. Again, we have, well, all of our clients are based overseas and they're buying a property that's, thousands of miles away. As long as you have a good property manager, and that's kind of crucial, it really shouldn't matter where the property is, as long as it's in a location that, is going to appreciate, it's going to be rentable, and you're going to be able to make sure that you get your rent. Next question. I own a property in Atlanta. Great rent to mortgage ratio. Can I use a DSR to take money out and renovate the existing property? Absolutely. And this is something that we highly encourage. Again, the U.S. has such a unique ability for people to build wealth through real estate. And especially with these loan programs right now, I mean, who knows how long, the U.S. changes all the time. We hope this DSCR will be around for decades, but for right now, you have the perfect opportunity to be able to use a DSCR loan, to be able to build a real estate portfolio. Potentially when you retire, you have this passive income, you want to pass it down to your children, whatever it may be. Okay, I think. One last question. Says, I'm just starting and would like to have an estimate about how much a minimum down payment is. I should prepare just to start owning a property. I'm assuming to buy a starter property at the moment. So again, our lowest loan amount that we're able to go down to is $100,000 with a maximum loan to value. Maximum loan to value of 75%. So you're looking at a purchase price of say $140,000 as a minimum. That is where you should start. Now, of course, just because you're buying your first property at this level doesn't mean your second or your third or your fourth property, you can ratchet these up. We do get a lot of this, and we see this, quite often, where people will see these auction properties or these properties that are selling for like $40,000, and they're in really, really bad areas. But they think, oh, this is Section 8, I'm going to be able to get the government. This is filled with problems. And I think going back to Nick's question about buying in a city that you're not familiar with, buy in a city that you're not familiar with, but make sure you buy a quality property in a quality location with quality renters. If you do that, you will never go wrong. Okay, so I think that is all the questions. I really appreciate it. It looks like pretty much everybody stayed on, even through the Q&A, and I really appreciate everybody's time. We're going to try to do more of these. We used to do a webinar once a month. We haven't had one for a while. We're going to try, as I think the market is going to start heating up, we're going to have these more often, and we try to have like an expert, like a tax expert or a legal expert or a realtor or whatever it may be. And we'll try to do this going forward in the future. So Again, within the chat, if you want to schedule an appointment with one of the loan officers, please click on there. Again, you can schedule it 24 hours a day. I really appreciate everybody's time. Thank you for your trust that you put in with American Mortgages. And we look forward to working with you in the future or currently if you have something going. Thank you very much.